Every so often, we get a client who is out on maternity or a temporary medical leave, and they want to buy a home or refinance. So the question becomes, can you qualify and still buy a home while being out on medical leave? The short answer is yes, with some conditions. So we're going to review that today. My name's Miles Pitcher. I own Superior Lending. Been in the business almost 24 years now. So temporary leave is employee-initiated, short duration, maternity, parental leave, short-term medical disability, etc. Okay. Some of the key points that you need to be aware of is that during that medical leave, you may be getting paid, you may not. It actually, that's not a deciding factor. It can be either. But the borrower must intend on returning to their current employer, and their job and position must still be there for them to return to it. So kind of stated this already, but yeah, you still have a job to return to. The lender or the lender will verify with the employer that the job's still there and what the pay rate will be when you return. A few key questions that we'll have for you is, while you're on temporary leave, maternity, are you getting full pay? Are you getting a reduced pay? Or are you getting no pay at all? And then the next question is, let's say you're buying a home. By the time you buy the home, close on it, and then have your first payment due, will you have resumed your job, gone back to work before that first payment is due? And you'll understand here in a minute why that matters. So we often get the question of how long is temporary leave versus a long or permanent leave. So as long as the borrower still has a job, they intend to return, there is no set time frame that defines what temporary is. We've seen a mother who had a baby and in total was out 10 months. That was still temporary leave because she, at the end of the 10 months, returned to her job, and the job was still there for her as the employer informed us. Okay, so here's FHA. So there's the exact spot where you can go read this, but one of the key things is that we can use the normal rate of pay that the borrower gets at their job if they return to their job prior to the first mortgage payment being due. And that's a big deal, especially if you're on leave and you're not getting any pay or you're getting a reduced pay. Now, there are some extra stipulations there that maybe you're getting reduced pay and maybe you won't be back before the first mortgage payments due. We can count some of your liquid assets you have. Maybe you have money in the bank. We can't use retirement accounts, but we can use what you've saved up and divide that out by how many. Let's say you will return to work in 4 months and you have $12,000 in your account. We can divide that by 4 months. So you would get $3,000 extra of income added to what your reduced temporary leave pay is to help you qualify. Fannie Mae, very, very similar. Freddie Mac, very, very similar. Exactly. There are tiny, tiny nuances. And so if you're dealing with maternity or temporary leave pay, and make sure you're working with a loan officer that will understand the different nuances between these guidelines. Here's USDA, and some of their things is that the income has to be coming again before the loan closing on there. Some similarities, but there is some difference. Big one here, VA. So they are silent on this in their guidelines. They do not have anything that says, hey, this is what you need to do. So they leave it to the lender, and the lenders will typically follow what Freddie, Fannie, or VA or FHA say on these and use those as their guidelines. If you're in a spot where you're dealing with maternity temporary leave, you want to buy a home or refinance, we can help you on that. Here's how you can reach out and get a hold of us. We're happy to help you with it. Thank you. Have a good day.